Welcome back to Strong Man Personal Finance. Woo! Welcome back to Strong Man Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And today we're going to look at Pinterest stock. Pinterest, my interest. I'm interested in Pinterest. So, I did a video about Snapchat by Splat yesterday, and I was comparing Snapchat to, companies that are in the advertising industry. And one of those is Pinterest. Now, I actually didn't know this, but I do have a Pinterest account that I created a long time ago and then never used it. But surprisingly, the majority of the users are women. Shocking. Well, you can't depend on women for anything, you know what I'm saying? Just kidding. So we're going to look at Pinterest stock. Now, this stock has been freaking wrecked recently. It's down 70% in the past year. However, there are some encouraging signs. And the good thing is it's actually profitable. It's kind of rare for a lot of these stocks that people are talking about on YouTube. So regardless of it going down or not, I want to look into it because I don't judge a stock based on temporary price fluctuations. And oh, by the way, if my camera freezes, sue me. So let's look at some of the basics of Pinterest. So Pinterest operates a visual discovery engine in the United States and internationally. They actually do have a pretty large international presence. It allows people to find inspiration for their lives, including recipes, style, and home inspiration, and other stuff. Okay, I can see this being a very female-centric app. So I actually go on here, and I do have an account. And this is me right here. Oh, look at Christopher Bear with his girlfriend, now wife. So I'm Belka1772. So you can see all my my posts about Chatterbait. So anyway, this is Pinterest, and you kind of go down, and you can see there's advertising here. Now, I don't know if you have to buy an ad to put anything on here. I assume you would. But you can see we have a promotion from Wyzant. That's the website I tutor at. Promotion from Chase, Discovery. So as you're going and looking through your ideas, you're getting advertisements thrown into your face. And they're kind of subtle, because they all kind of look the same. But like I said, I'm not sure if you have to get anything on here. I wonder if you have to pay for an advertisement or if it's only for certain companies, which is interesting. So this is Pinterest. You click on crap. Let's click on this advertisement and see what happens. Wow, $100. That's amazing. So this is it. It's a very simplistic website. And they even have an app, which I don't use because, like I said, I created my account and then never did anything. So let's go look at Pinterest financials because that's ultimately what matters when you're buying a company. So we could see the first thing is revenue, my avenue. So ever since they started tracking the revenue, 2018, it's grown pretty massively, which is pretty impressive. But recently, as we started to enter into a recession, potentially, people are getting freaked out because during recessions, companies tend to cut advertising because not as many people are buying. And advertising is a very discretionary part of a company's budget. So companies that rely heavily on advertising like Pinterest could be potentially slammed. And we could see year-over-year growth is starting to slow down. You had these massive growth numbers. These are quarterly numbers. But you can see year-over-year, they've slowed down from 125%, 78%, down to 19%, 18%. And this is also a very competitive industry. There are plenty of freaking apps that, deal with advertising. So there's got to be something about Pinterest that's special that would entice people to sign up for it and continue to use it. So revenue, my avenue is slowing down. So I'm definitely, when I put in my assumptions, I'm going to have lower revenue than this. Because you look, there's just a billion competitors out there. This is not a very moaty company. Now we go down and we look at gross profit. Now this is the first thing that really caught my eye. It really showed me how trash Snapchat is. The gross profit of Pinterest is in the 70s, high 70s, low 80s. That's pretty equivalent to other advertisers like Facebook. Now Snapchat was in like the 50s and 60s, so it's going to be really hard for them to become profitable. And they even have a positive profit margin. So it kind of swings back and forth because you think about the cycle of advertising. Advertising ramps up, during the holiday season. That's when most retailers make most of their money. And then it crashes back down at the end of the holiday season. So you can see here, for the profit margin during the holiday season, they got up to a 20% bottom line profit margin. And then they had a massive swing to the downside. So really, you almost want to look at like annual profit margins to really get a good feel for how the company is. So we go down and we look, and we can see, okay, their profit margin was 12%. That's probably a better number to use for the short term. Now, another concern is if we enter into a recession, they're probably going to be generating lots of losses. Because even with a high gross margin, if they don't have a lot of revenue coming in, it's harder to cover a lot of the expenses, selling, general, administrative expenses, interest, yada, yada, yada. So this is a tough call. I like that they're profitable. What I don't like is that they're issuing shares at a pretty healthy clip. You can see in 2018, they had 127, and now they're up to 640 shares. That's pretty massive. And if you look at diluted shares, that's up to 692 million shares. That's a lot of freaking shares, okay? Let's go look at the balance sheet. So they have cash and cash equivalents of $2.4 billion. And we're going to see if they're going to go out of business anytime soon. So, no, they're not. Because their current liabilities, their short-term debts, are only $259 million. Not that bad. Now, let's look at their debt growth. So they are packing on debt, but is it growing as fast as the assets? You can see the debt. They had $151 million of debt in 2018. And now they're up to $209 million of debt. We go to long-term assets, and they're actually shrinking. So, okay. So long-term debt, long-term assets are shrinking. Property, plant, and equipment has stayed flat over the last couple of years. I mean, it's grown a little bit. So the debt, whatever they're using to buy the debt, it could have something to do with them paying or them buying fixed assets, property, plant, and equipment, or it could be because of an acquisition. And we can see they had an acquisition in 2021, a pretty significant one, because their goodwill, which is paying more than the fair value of the net assets of a company, went up by about $45 million. So let's go look at the statement of cash flows. So operating cash flow has been positive for the past couple of years. That's good. And it's growing. We can see capital expenditures. They've actually slowed that down. So that tells me they're going to be generating more free cash flow. And that makes sense because they use that, like I said, to purchase another company for $36 million. So that's impressive. That's good. At least they're acquiring other companies. So they have a profit margin. They have positive free cash flow. Let's see the prices. Let's see some ratios here. So PE ratio. We have a current PE of 39. That's pretty rich. I mean, a company has to be growing pretty freaking rapidly to get that PE ratio. And I'm going to show you something very soon that's concerning. Price to free cash flow, 18. Nothing crazy about that. Price to books, 4. I mean, I guess that's kind of high. Price to sales, 4. I mean, I guess that makes sense for a company that could potentially be as profitable as they are. Now, if we go look at Meta, Facebook, my Schleschluck, Meta, or Facebook, excuse me. If we go look at Facebook, so basically Pinterest, if you want to see Pinterest as a fully mature company, potentially, you can go look at Facebook. Because if you look at the gross margins of Facebook, where is it at? Let's go look at the income statement. The gross profit margin of Facebook is in the 80s. It's a little bit better than Pinterest's, but it's similar. So if Pinterest matures and becomes kind of like Facebook, we could potentially expect a profit margin roughly in that realm. So you can see Facebook's profit margins are very healthy. 33, 26, 39, 39, 36. Pretty profitable company. However, always keep in mind that in the short term, with this recession looming, may have some trouble here. So we're going to have to look. Now, let's go and look at their financial statement, their most recent annual report. So here are some trends in user metrics. So the first thing that's concerning is monthly active users, quarterly monthly active users. So we could see they had growth in users pretty consistently all the way till Q1 of 2021. And now, every single quarter, they're shaving users, every single quarter. So if they've peaked out at users, they're going to be either flat going into the future for user growth, or they're going to be in decline. That's not the death of this company, but they're going to have to find more ways to make money from those dwindling amount of customers. Now we can see the base of their customers the vast majority of their customers come from the international, and that's what looks like most of the growth is coming from is international. You can see U.S. customers basically flat. I mean, they've had some growth, but international is the big daddy. It's nice that it's diversified, but if you go down and look a little bit more, you can see monetization by customer base. So they have very few customers in the United States, but that's where they make most of their money. International, they have a ton of customers, but they don't make a lot of money. So what they're going to need to do is somehow continue to monetize their international customer base better. If they can figure that out, this company could be a freaking beast, okay? But like I said, the biggest concern is their user growth is flattening and starting to decline. It's mostly international, and the international customers don't make them that much revenue. It's all U.S., my schlew-S. So this company is, riding pretty heavily on the fate of one country, the United States. So I want to see them really start to increase their monetization from international, and I want this decline in customers overall to slow down, stop, and maybe even grow. There's still potential. It doesn't mean it's the death of the company. So let's go do a ghetto fundamental analysis, okay? So we go back and we look at the financials. Now, I'm going to be generous to Pinterest, okay? I'm going to say their revenue, my avenue, grows at, over the next 5 years, we'll say 12.5%, just to be, maybe that's a little bit on the high side. Profit margin over the next 5 years, we'll say roughly 20%. Now, Facebook's are 33. So if they have a 33% profit margin starting tomorrow, going for the next 5 years, and they get 12.5% revenue growth, it's already a buy right now. But that's a pretty risky assumption, especially when you consider that we're about to enter into a recession possibly. So profit margins, I don't think are going to be 33% anytime soon. So if you want to kind of flatten it out, you could say, okay, 20%. And like I said, you would have to do a way more in-depth analysis and actually like plug in individual numbers. But I like to be conservative. PE at disposition, I'll say it's 15, maybe 20. Okay. And share dilution, we'll say, how much have they been diluting year over year? That's tough, man. They've been issuing shares hand over fist. 14%, 11% year over year, 5% year over year. It looks like it's slowing down, though. That's the year over year numbers. And it almost looks like they bought back shares here. Did they actually buy back shares? Let's see. No, they actually issued shares. So I don't know what's up with that freaking number right there. But I would assume they're going to issue shares. We could say they're going to issue at 5% per year just to be safe going into the future. And we don't have to really worry about free cash flow for now. So looking at the numbers, if you believe these assumptions, 12.5% revenue growth, 20% profit margin starting tomorrow over the next 5 years, and a PE of 20 at disposition, you get a buy price of $14.70 to get a 15% return. If I was to be conservative, I would probably lower the PE. The PE is the big one, okay? So to be honest, I would probably really look at this company. I want to see what they do with their international segment, number one. And I want to see their profit margins start to stabilize, kind of like Facebook's is. Facebook's really easy to look at. Their profit margin is pretty consistent. But right now, Pinterest is kind of all over the place, and it could be hit or miss. They could overcome this recession and come out of it crushing it, or they could continue to decline, lose more and more customers every year, and fail to monetize their international segment, and then their profit margins probably won't be as great. So I will reconsider this stock potentially when it's trading around $10, $11. I'll relook at it. Doesn't mean I'm going to buy it at that point, but I'll look at it again. But it's an interesting play because at least they're profitable and they have some pretty global exposure, which is not bad. But this is concerning to me. Losing users, mostly international, and they don't make that much money from international. So that's kind of my thoughts. I'm not buying it anytime soon. If it goes down to like $7, okay, maybe I'm interested. But right now, it's still a little bit too rich for me. So that's it. Hope you enjoy the video, and I'll talk to you soon. Cheers!